Today we published a report for the first quarter. So a warm welcome to this interview with our CEO, Jonas Gustafsson. So welcome, Jonas.
Thank you, Katrin.
So stable results and strong order stock in the quarter. So what's your view on the report?
Yeah, I'm pleased with the fact that we are delivering a stable result in a mixed market. And the EBITDA margin was 8.6%. And when adjusting for the negative calendar effect, it was even slightly ahead of last year. And sales was 6.9 billion, equal to 0.5% adjusted organic growth. And we have seen the growth level coming down sequentially from very high numbers. And we had in this quarter lower volume in the pulp and paper sector. Positive was that the order stock is increasing, both compared to last year and also sequentially. And the energy division have an all-time high level on the order stock. And then we are working across the whole company to improve profitability. I'm also happy to see the continuous development of the infrastructure program.
So what's your view on the market?
It's a bit mixed. So looking on the industrial sector, we see strong demand in automotive, in the defense sector. But then we have seen, for example, in pulp and paper on larger investment project, a continued weak demand. Then the energy sector as such is really strong. And then looking on infrastructure, the real estate continue to be on low levels, while public investment, I would say, is stable.
How do you see our growth development in the quarter?
Yeah, so net sales was 6.9 billion, equal to total growth of minus 0.4%, but adjusted organic growth was 0.5%. So in general, we are coming down from high levels last year on growth. But also in this quarter, 4 divisions had positive growth, while process industry, due to the lower volume in pulp and paper, have impacted growth in the quarter. And we are doing now capacity adjustment in process industry.
How did the order stock develop?
Yeah, we saw an increased order stock, both sequentially, but also compared to last year, where we were up 2.4%, and the order stock now is on 20 billion. So a strong quarter in the order intake, and the energy division now have an all-time high order stock. And also process industry, compared to quarter 4, is flat in the order stock. So in general, we are pleased with the high level on the order stock.
So let's talk about the result. Can you comment on the development?
Yeah, so EBITDA was 590 million and the EBITDA margin was 8.6%. But in the quarter, we had a significant negative calendar effect. We had 11 working hours less. This is equal to 1.5% unit on the margin. So when we're adjusting for the negative calendar effect, we were slightly ahead of last year.
Let's talk about the performance in our 5 divisions, starting with our biggest division, infrastructure.
Yeah, so infrastructure delivered a stable result, and when adjusting for the negative calendar, it was even slightly ahead of last year. And this is also in a weak real estate market. So I'm pleased with the fact that the result is stable, and also that the infrastructure program goes according to plan. And then moving over to process industry. And here we saw lower growth and lower margin in the quarter compared to last year, when we really had high growth and high margins. And this is, of course, driven from the lower volumes we have in the CapEx projects in pulp and paper. And we are doing capacity adjustment. But for sure, we also have a lot of other segments in the green industrial transformation where we are taking a position in process industry. But this quarter, we saw the lower growth impacted from pulp and paper. And then looking on industrial and the solution in a mixed market delivered a stable result. Also here, adjusted for calendar, slightly ahead of last year. So a stable result. And then the energy division that delivers a stable result in the quarter in a very strong market. And finally, management consulting, slightly lower margin than last year, more a timing effect in a very interesting market.
In the quarter, we communicated an acquisition in Finland. Tell us more about it.
Yeah, so this is following our strategy to build up our position in renewable energy. And this is a very interesting company in Finland with 60 million Swedish crowns in revenue and 40 employees. And this is following acquisitions that we have done over the last year, building an ecosystem, positioning ourselves in the areas of wind and solar. So we are very pleased with this acquisition that fits perfectly into our strategy in a very strong energy sector.
So finally, what is AFRY's focus going forward?
For sure, to continue to focus on driving profitability improvement across AFRY, but for sure the infrastructure program is key to continue to push and improve our margins. Secondly, to go for growth, profitable growth, there are sectors with strong demands. We talked about automotive, defense industry, energy sector to push and go for profitable growth. But the third one is to be fast and flexible. We see now a slowdown in the pulp and paper sector, so for us to be fast in adjusting capacity and be flexible is also key. So these are the three areas that we will focus on in 2024.
So exciting times ahead.
Yes, for sure.
Thank you so much, Jonas.
Thank you so much.
Thank you so much for watching today.